Yeah, so iron ore has really been the last domino to fall in the commodity space in recent months. We've seen new energy prices of lithium, nickel have done very poorly. Steel prices have been going down for a number of months, 7-year lows in China recently. But iron ore was doing extremely well, holding above $100 for most of the year until the last couple of weeks. So it's finally given way because of that overwhelming negative steel demand in China. It's obviously driven by the construction sector and cement demand in China running down 11% year to date. Local government budget cuts, infrastructure spending cuts, and obviously the weak housing market as well, really hurting the steel demand in China there. And iron ore supply has actually been quite strong this year. Imports year to date are up about 40 million tons, and the inventory in China has been building and building and building. But the price until recently was stubbornly refusing to go down. That's now finally broken. Historically, you do tend to see August, September time seasonally very weak at the end of the summer in China, and we've just seen steel mills there cutting production aggressively in response to those low steel prices and weak demand, and that's finally broken the back of the iron ore market. Bought prices down to about $90, now seeing a little bit of a restocking recovery, as you mentioned there. But as Mike Henry mentioned in your earlier bit there, he was saying that $80 to $100 kind of cost range to support iron ore. That's certainly a number I'd agree with there.
But is this a structural breakdown or a cyclical one, Ian?
A little bit of both, because we've had very strong iron ore supply growth for the last 2 years now, running at record highs after struggling really since kind of 2017. Brazil's doing extremely well now. Their exports up strongly. Australia, there's been new mines coming through there last couple of years. India removed their export ban on low-grade iron ore at the end of 2022. So there's been decent supply growth, and of course the Chinese housing downturn, construction downturn, that's been going on for a couple of years as well. However, seasonally, I think this is probably the weakest time of year. August, September, traditionally, that's when construction activity is at its lowest in China. Then you see kind of coming out of the October 1st week-long holiday, better weather conditions, people push to meet budget spending by the end of the year. So you tend to see better demand conditions coming through in the Chinese steel market in the fourth quarter. So I do think that, yes, iron ore's been the last domino to fall. China has been terrible this year on the demand side, on the construction side, but there are still bright spots in China, right? Auto production is still growing, appliance production is still growing, the export economy is still doing well, the green energy economy is still doing well. So I think to some degree, a lot of the negativity around China's commodity demand is probably overdone here, but we should be through the worst now. And I think seasonally for the rest of the year, we can see some improvement. And not just China as well. You've got India coming out of monsoon season now. Their demand reaccelerates for the fourth quarter. So that should also help global steel prices and the raw materials as well.